IFRS 8 Operating Segments. Welcome to this lecture. Now, this is a standard you've already read, studied, and submitted an assignment on. So, guys, I really hope that you read the standard. In any case, I'm going to run through again, and then we'll focus on applying the provisions of this standard to solve relevant questions. Now, IFRS 8 operating segment is a standard that provides guidance on the kind of information that an entity must disclose. And it is important because some of the entities or listed entities we deal with, they are into many products. They are located in different geographical areas. And therefore, when they present their consolidated financial statement, it summarizes at a very high level the information about the entity's activities. And so IFRS 8 is a standard that requires that some of the information should be provided separately on some segments. And therefore, some entities will provide those information based on geographical areas or based on product type or even based on the various divisions they have. So that's the importance of IFRS 8 as a disclosure standard. The core principle is for the entity to disclose information to enable users of the financial statement to evaluate the nature and financial effects of business activities in which it engages in the economic environment. So it's about the various activities and where they are located. So a business that has a lot of products and are dotted all over the world will have to provide this kind of disclosure on its activities so that users can evaluate the effect of their activities on the financial statement, right? So when you think IFRS 8, you need to define operating segments. And so it has these three core points about what an operating segment is. A component of an entity that engages in business activities whose operating results are regularly reviewed by a chief operating decision maker and for which discrete financial information is available. So that's the criteria by which you define operating segment. And then you have to identify a reportable segment. Now, a reportable segment is an operating segment, and any operating segment that have been aggregated and meet certain criteria. So it's not every operating segment that will be reportable. For it to be reportable, first of all, it must meet the definition of operating segment, and then it must meet certain threshold or threshold, quantitative threshold for it to be reportable. And the provisions of the standard is the entity must provide information or disclose separate information about each identified operating segment and aggregated operating segment that exceed the quantitative threshold. And therefore, you must also go and identify those quantitative threshold. Quantitative thresholds. The entity must provide information, the quantitative threshold that makes an operating segment reportable, that its reported revenue, including both sales to external and internal customers, is 10% or more of the combined revenue, internal and external, of all operating segments. Then, 2, the absolute amount of its reported profit or loss is 10% or more of the greater of the combined reported profit of all operating segments or the combined reported loss. So you compare profit and loss, the greater of them, of the two, you then calculate a 10% on it. We'll use an example to explain some of these points. And then three, its assets are 10% or more. So there are three quantitative thresholds to work with: revenue, profit or loss, and assets. And then apart from the 10% threshold, you also have to ensure that the total revenue being reported, the total external revenue now, the total external revenue being reported is at least 75% or more. So if you identify the reportable segment and you add up their external revenue and it's not equal to 75% of the total external revenue of the entity, you should add more segments, even if the segments have not met the criteria to be reported. Okay. Another point to highlight is aggregation. Two or more. Sometimes there are a lot of operating segments, and therefore it will be too much to provide information on all operating segments, and therefore the standard allows entities to aggregate. It's called aggregation of operating segments. So you take segment A and B and you bring them together as one segment, but there are criteria to be met before aggregation can be achieved. Two or more operating segments may be aggregated if the segments are similar in the following aspects. So, nature of products and services, they produce kind of same products and services. Nature of the production process, type or class of customer for their products and services, the methods used to distribute their products or provide their services, and the nature of their regulatory environment. So these are the criteria that can be met, that must be met for two or more segments to be aggregated into one. All right. Now, after that, the standard also then requires the entity to disclose certain kind of information. And so a part of your reading is to determine the kind of information that must be disclosed. And here we are, major disclosures. An entity shall disclose a measure of profit or loss, total assets for each reportable segment, only if this information is regularly provided to the. So the criteria of um, reporting a segment is that that segment is reviewed by the chief operating decision maker, who always review the activities for allocation of resources. And so if there is a segment but the chief operating decision maker does not even look at its performance, then we will not consider it as an operating segment for the purpose of IFRS 8. Because remember the definition of operating segment, those 3 points, and therefore the information must be passing through in order to pass as a reporting segment. Now, let's apply the standard. Now, let's move on to apply the provisions of the standard. Let's look at the first question here. Gina Limited is preparing its operating segment disclosure note for the first time following its listing on the local stock exchange. During the year, its chief operating decision maker regularly reviews the results of its 3 separate divisions. So we have the domestic travels operation, international travels, and road construction. Gina Limited is intending to report 2 operating segments in its disclosure note as opposed to the 3 reviewed by the chief operating decision maker. The domestic and international operations are to be combined because it is felt that they have similar economic characteristics due to the services that they offer. The domestic operations involve a competitive tender process to run the railway service, which is then awarded by the local transport authority. The local transport authority then sets the ticket prices and collects the fares, which are then distributed amongst the various operators running the contracts. The international operations ticket prices are set by Jana Limited, who collects the fares from the passengers directly. Required. Advise Jana Limited as to whether the proposed combination of the two operating segments is appropriate. So this question is actually testing the aggregation criteria. Aggregation. So this is an entity that wants to aggregate two of its reporting segment into one. Aggregate. And the question now is, are they right to be aggregating? So you have to look at the case, the scenario, and advise whether they are right and so they can go ahead and aggregate, or they cannot aggregate because they have not met the criteria, aggregation criteria, and therefore they have to report on each division separately. So that's the requirement. All right. Now, before you start, you have to recall the aggregation criteria. So what are they? Remember, we just ran through the aggregation criteria in the previous recording quickly. And so here, the aggregation criteria. You come back here and identify the aggregation criteria, which is that the products and services are similar in nature, production process similar in nature, type or class of customers and products are similar, method used in distribution and regulatory environment are all similar in nature. So that is the criteria. So you now go back to your case and find out whether those criteria are met for the entity to aggregate the domestic and international travel operations. First of all, the domestic travel operations and international travel operations, they all provide travel services or transport services. So they are similar in the kind of product they offer. But how about the distribution, the mode of distribution? Maybe they are both having trains and they all carry passengers by trains. But then there are other aspects that cannot be said to be similar. One, the domestic one is through competitive tender process. Competitive tender process. Here, it involves competitive tender process, which means the entity bids, and once it wins, it has the customers. It doesn't have to think about where customers are coming from because everybody must use its service because it has won the contract from the local authority. So the risk involved in trying to get customer is not high. However, the international travels, they have to deal with the customers directly. So they have to engage in activities that ensure that the customers come to them. Secondly, the ticket pricing with the domestic, it is determined by the local authority. So they don't have to worry about how much they are charging or not. And once the local authority sets it, all customers kind of have to buy into it. But with the international, customers have the option to look at the price and decide that I don't like this entity's price. And so I'm looking at another entity because they have the options all over. But when it comes to domestic, they don't have option because they all have to use the local authority travel system for which the prices are predetermined. So again, the risk involved are not the same. They are not similar in any way. And the type of customers, actually, as far as the entity is concerned, its major customer is the local authority. It deals with the local authority who has access to the customer base. But for the international travels operation, their customers are all these people out there who have access to decide whether they are traveling with them or not. And so the point at the end of the day is, even though they kind of provide the same service, which is travel operations, there are other characteristics that do not cannot be described as similar between the two. Again, if you take the regulatory environment, it means that domestic travel operation is regulated by the local authority, but the international travels operations would be regulated by another kind of rules and regulations, because then it's not the local authority, it may be another international um, regulator. And so they don't have the same regulatory environment. So based on all this, we can conclude that it would not be right to aggregate the domestic and international travel operations. And therefore, Jaina Limited must keep the three operating segments and disclose information on them separately. So that's how you think through the essay kind of question. Another essay kind of question you can think about is, what are the what is um a reportable segment, and what are the criteria for a reportable segment? So you have to define what a reportable a segment is, an operating segment is, and then come to a reportable operating segment. And then you identify the quantitative threshold, which are the 3 10% threshold and the 75%. Please, when you are dealing with a threshold, you have to identify the 3 10% and the 75 10%. And therefore, if you are to determine whether an operating segment is reportable, these are the thresholds you will use to take that decision. And that will be what we'll do with the other questions, question 2 and question 3. Thank you.